IEA Director Fatih Birol told the CERAWeek Energy Conference in Houston yesterday that there is a need for more investment in oil and gas to ensure energy security. That puts him more in line with President Trump's pro-drilling agenda, and it's a U-turn for the IEA, which said back in 2021 that there should be no new investment in oil and gas projects. The CEO of oil trader Governor, though, told the same conference that the growth in global oil supply is outstripping demand. So who's right? Well, Homayoun Falakshahi is a senior oil analyst at Kpler. Homayoun, do you agree that the growth in supply is outpacing demand?
Yes, indeed. Actually, this year we still see supply growth outpacing at least crude demand because looking at the volume of oil that is going to be increased at refinery processing, it's going to be lower. We think it's only going to be about 400,000 barrels per day, even a bit less, whilst production growth from non-OPEC plus only is going to be about 800,000 barrels per day. And you had OPEC plus increasing its, starting to bring barrels back online as well. On the products demand front, we think it's going to be growing by 800,000 barrels per day. So yes, in total this year, we should see supply outpacing demand.
In terms of short-term demand then, the worries about a recession in the US are clearly increasing on the back of President Trump's tariff policy. How do you expect that to hit oil demand?
Yeah, indeed. So we actually foresee a few, the US oil demand actually decreasing because of some refinery closures. On the other side, the Trump's new policies on electric vehicles are going to be quite, forbidding and quite tough for new electric vehicle demand. So we actually foresee demand for EVs to continue to grow, obviously, but not as strongly as it would have been otherwise. But this, we think, will not have a strong impact this year. We think, the impact from these policies are going to start having an impact from next year onwards. And it actually mean that by 2035, we see gasoline demand in the US higher by about 200 kbd compared to what we used to have before. So we actually foresee gasoline demand decreasing by about almost 1 million barrels per day. But that 1 million barrels per day became actually 800,000 barrels per day because of Donald Trump's new policies. So it means that in the medium longer term, oil demand should remain supported in the US because of those new policies from the new administration.
What about demand in China, Homayoun, where of course we've seen an economic slowdown in recent years, but also a pivot towards EVs that's already gone much further than in the US, hasn't it?
Absolutely, yeah. I mean, looking at China, the demand picture is very bleak. We think China is not going to go back to becoming, the world's engine growth for oil demand, and that probably will continue to be the case over the medium and longer term too. Most of the demand growth will remain pocketed within the petrochemical and naphtha over the longer term. But looking at other products, as you say, especially for gasoline, we think it's almost peaking, or if it hasn't peaked, it will be peaking very, very soon. It's a matter of months. And, looking at the big cities, about 50% of the new vehicle sales are actually EVs already. So, yes, when it comes to China, we think that long-term oil demand is going to be very weak.
You mentioned OPEC Plus bringing barrels back online despite this demand picture. Why?
I think, the group came to a conclusion that, it couldn't just kick the can down the road forever. It's true that non-OPEC Plus supply growth is on its own outpacing demand growth for products. So there's not much room left for OPEC Plus to increase production. But, the reaction for the market shows that in the end, even if they had probably decided to continue, withholding their production, the reaction would also have been negative because of, the market interpreting that as a signal of weak demand forward-looking.
What about a potential end to sanctions on Russia, which has of course been mooted recently by President Trump? What would that mean for the market if Russian supply comes back online?
I think the potential impact could mean that we could potentially see more Russian crude go back to the US, even though that trade historically was very minimal. It's about 150,000 barrels per day compared to seaborne exports of above 3 million barrels per day for Russia. But that could actually become a savior for some of the U.S. Refineries, especially in the U.S. Gulf Coast, because of the sanctions on Venezuela, tariffs on Canada and Mexico. There could be a shortage of medium, heavy type of crude in those refineries. So Russia could actually be one of the solutions for these refineries if it's allowed to export to the US. When it comes to the EU, we don't foresee a relaxation of EU sanctions on Russia anytime soon. So that I think remains out of the question.
That was Homayoun Falakshahi of Kpler.